So now is the time to focus on your team and really work with your current customers. It's also the time to up your standards. So just because you could write it before, let's not spend our time on it. So you may have heard this term hard market or hard insurance market. We want to take a moment and break down what is a hard market in insurance. So a hard market in insurance has characteristics of higher insurance premiums. Basically, it's kind of a market reconciliation. So over time, all the actuaries, they set the premiums, and from time to time, things shift in the economy or in the world, and then the premiums need to be adjusted. So in our hard insurance market now, some of the premiums are adjusted because the cost of everything has gone up. So the claims costs are happening. The claims are happening more frequently. So as they look at their predictive models, basically this doesn't align. And because of that, they have to escalate rate increases. Another key strategic part of the hard market is more stringent underwriting guidelines. Some carriers out there are actually losing over $3 million a day. Now, you can imagine if you were losing that much money, you'd have to make changes. So as opposed to a market where it's more open, in a more typical market, carriers are hungry for new business. In this market, carriers are trying to be more strategic and very stringent. They only want very, very good, low risk properties or clientele or businesses because they can't sustain many more losses. So what it means is like before you used to be able to write a wide variety, now we're writing a very small amount because the carriers, in particular, roofs are a big issue, and they do not want older roofs. Older roofs cause a lot more, pain and suffering when there's a claim. And in addition to that, the cost of roofs has gone up. So not only is the cost that claim more, we have an older roof, you could just start to see, how that looks. Now, I like to say, would you take your 401k or your retirement fund and insure something? And if the answer is no, the carriers are looking at it from that perspective as well. The other thing is that carriers are trying to write less policies. This is another strategic part of a hard market. So because they want to just reconcile the current book, before, a couple of years ago, it was new. How can we earn that business? Now it's, hey, we're sorry, we're not taking this. So we're almost like in a scenario in some places where the carriers are almost rationing policies, like you get X policies to write with us a month or a quarter. And that's simply because right now they're overextended on their policies. So, it's very delicate. Each state can operate differently as far as non-renewals go, how many they can do. Same thing with rate increases. The insurance commissioners for many of the states approve rate increases. So when they say, hey, we're capping you at this, and they really need X to stop the bleeding, now all of a sudden they have to look and say, okay, well, we have to reorganize over here. So the bottom line in a hard market is it's kind of, I like to equate it to the financial industry. Mortgages right now in this hard market in 2024, mortgage interest rates are up 8 or 9%. And again, the lenders are very constricted of only writing certain types of properties. And that is simply because we have inflation, we have a fragile economy. So they don't want to go lend on a home that then gets foreclosed on or that's not being maintained properly until the loan is over. So we're in a conservative, constrictive environment in other parts as well. Insurance just tends to be one of those things that people have a little bit of a lack of an understanding on because I can choose to go buy a new home. I can't choose if I want to have insurance. It causes a little bit of strife, and in particular in agencies, producers struggle because we don't have the open markets. Clientele struggle because now their insurance is up 30%, potentially more or less in some markets. And then at the end of the day, we're hearing no, where we remember days where we could write, a wider variety of risks. As an insurance professional, how you want to handle a hard market is seeing that there is opportunity here. It is not all doom and gloom. This will cause more shopping in the marketplace. And if people are going to have to pay more, this is a reality that people are facing. They are going to want to experience a higher quality, better service. So now is the time to focus on your team and really work with your current customers. It's also the time to up your standards. So just because you could write it before, let's not spend our time on it. If there's clients that are notoriously terrible in your book, let's relocate them to the competition. Because at the end of the day, we can really cull our book right now and we can really invest in our team's skills. I believe that diamonds are made under pressure. This will yield the greatest insurance agents of all time. So those are a couple tips and strategies on how your agency can handle a hard market. But by all means, please check out our hard market training course for your team, how to have these conversations, how to feel confident doing it, how to manage your time. The game has shifted. I like to say, for some agents, we got caught playing soccer on a football field and we were getting clobbered for a while. Now we need to reorganize and give your team a new set of training skills to play football on a football field. So let us know if you have any questions, but this is your definition of what is a hard market.